It has been quite a while since I last talked about Tesla. So in this video, I will share some of the new developments that have happened to Tesla recently. And if you are investing in the company, what are some of the potential risks that you will need to take note of? Finally, I will also share what is my outlook for Tesla. Am I still bullish or bearish about the company? Also, do join my Telegram group to discuss or ask any questions that you may have. With that being said, let's jump right in. First up, while Elon Musk has been promising their full self-driving would be ready year after year after year, it's obviously still not ready yet. But recently, FSD has had a big breakthrough with the latest version 12. For this, I'll just use Bazaar's tweet to explain this. Up to this point, Tesla and other companies have to spend a large amount of time running through simulated scenarios to generate code that will teach the system how to handle these situations. The code is oftentimes written by a human and needs to account for every variation of something happening on the road. But with the latest FSD version 12, Tesla now takes the video data that it has collected and runs it through an AI, which will then figure out what the car should do based on what it sees. What's important is to highlight here that Tesla has done zero work in telling the car how it should interpret the world. That means the AI doesn't explicitly know what a lane is, what a traffic is, what a stop sign is, what a cone is, etc. In other words, Tesla has moved away from humans figuring out how to write code that tells a car what to do, and now everything will be done by the AI, which will figure out the best way to account for every situation. Elon Musk tested this out himself in a 45-minute live stream, though he had to intervene when he tried to drive through a red light. But even so, this is amazing because we no longer need humans to code for every scenario. The only limitations now is the amount of data that it can collect and the computing power needed to train it. For the amount of data that it can collect, the more cars that Tesla sells, the more data that it will collect. Heck, it seems like it has even gone hyperbolic at this point. As for the computing power, Tesla has just upgraded their AI chips to NVIDIA's latest H100 chips, which is 9 times faster than the previous chips. But Tesla is not done yet. At the same time, they are also working on their Dojo supercomputer, which is expected to be completed by the end of next year and will give a much higher performance. And here's the best part. Even though FSD is not ready yet, we can already see the benefits of it. Here, we can see that the dark blue line, which are Tesla vehicles using autopilot, are much safer as compared to a normal person driving, and it has been slowly becoming safer and safer over time. But why is this important to us? Besides, driving becomes safer? Simple answer, more profits. Right now, Tesla has a gross margin of about 18.2%. And yes, it has been coming down recently because Tesla was cutting their car prices. But Elon Musk estimated if ever FSD is completed, Tesla could see an 80% peak margin on the automotive side, which I have to admit is quite unbelievable. But even if it doesn't reach 80%, the margin would still be high since software margins are usually very high. Add this to the fact that Tesla can license this to other automakers, which would further boost their profits. So that's the first exciting development. Quick pause. With Tiger Broker's Auto Invest, you are now able to automatically invest with as little as $1 into your favorite stocks. To use it, just open up your stock, tap on Trade, then tap Auto Invest. And here, you can set the frequency to invest from every day all the way to every month. So that's nice. As a bonus, if you sign up using my link down below, you will earn a 3-day 20% U coupon. Fund your account with 1,500 Singapore dollars, hold for 7 days while completing 5 buy trades. You will earn $40 worth of Apple fractional shares, 1 free stock worth up to $285, and an exclusive $30 worth of Tesla fractional shares. And of course, you will also get a whole bunch of zero commission trades for stocks and options. So if you are interested, you can sign up using my link down below. With that being said, let's get back to the video. The next exciting development is Tesla's energy business. Remember, Tesla is not just a car company, it is also starting to become an energy company. If we look at Tesla's revenue breakdown, you see that their energy segment has been slowly increasing. As Elon mentioned back in 2019, the solar and energy storage business will grow faster than their electric car business. He mentioned this again last year when he said that battery storage will outstrip electric vehicle growth. So there's two things going on in the energy segment. One, Tesla energy storage deployments have been skyrocketing recently. This includes their Powerwall for home installations, Powerpack for commercial installations, and the Mega Pack. The equation is simple. More deployments, more profits. 2. They've added more superchargers around the world. Just look at this map. They're basically all around the US, Europe, and Asia. This makes it increasingly hard for any competitors to catch up to Tesla because there's no way they will match the number of superchargers that Tesla is building. Then how? If you can't beat them, you join them. So far, 4 big automakers have announced that they will join Tesla's supercharging network, which means that we will soon see a further boost in energy revenue when they start using the superchargers. Next development, we will see more Tesla models soon. Cybertrucks will finally start productions very soon. Also, don't forget about that Tesla Semi which they rolled out late last year to PepsiCo. We might hear more news about them soon. There's also another new type of Tesla Model 3 called Project Highland, which was being sighted in a few countries. Not much info has been given yet, but it will definitely be an upgrade from the existing Model 3. And of course, their next-gen platform, which will include a budget version of the Model 3 and Model Y, passenger vans, and even a bus, though it is still in the development phase, so we might not be seeing them until 2025. All this will mean that Tesla will be covering more vehicle segments, which means more profits again. Lastly, Tesla EV batteries, or also known as the 4680 cells, while it has not met Tesla's target for production and performance, things are certainly improving as they continue to work on it. So those were some of the exciting developments going on with Tesla. But let's talk about its risk too. First risk, valuation. Ask any Tesla bears and the first thing they will tell you is that Tesla is overvalued. Just look at its PE ratio and you will see why. While Tesla has a 73 PE, Toyota is only 11, Mercedes 5, and BMW 5. I also tried calculating Tesla's intrinsic value using my discounted cash flow calculator, which is totally free to use, link down below. I assume that Tesla will have a 15% growth rate over the next 10 years, and tada! It should only be worth $40 instead of the $256 that it is at right now.
See, this Kelvin also become a Tesla bear now.
Wait, I would say this assumption is too naive because it only assumes that Tesla will just continue to sell more cars or deploy more energy storage. That's all. It doesn't take into account all the new developments that I've mentioned just now. What if Tesla manages to solve FSD in the next 5 to 10 years? What if Tesla releases more budget models in the next 5 years? Or maybe they have a breakthrough in their 4680 cell? What about more automakers joining their supercharger network? All this may be possible, right? Also, don't forget that the whole reason Tesla's margin has gone down is because of the bad economy. So what if the Fed starts lowering rates in 2024 or 2025? Will demand for Tesla cars go back up, which will then allow them to raise their car prices again? Maybe. The second risk is China risk, such as increasing tensions between the US and China, increasing competition from China automakers, and the weak China economy. Right now, almost 40% of Tesla cars are being made in China, and about 22% of its revenue come from China. But the good news is that Tesla has been slowly diversifying away from China, both in terms of production and sales. For example, they are looking for more new locations to build their new factories. They have been entering new markets such as Malaysia and Thailand. As for increased competition in China and the weak economy, this is inevitable, but even then, their sales seem to be getting better recently. Okay, here are my thoughts. Personally, I think that Tesla is an amazing company with a huge potential. However, their stock price is definitely way overvalued right now. So, it can go either way from here. If Tesla continues to perform well, the stock will continue to go to the moon. But if they fail to meet expectations, such as their FSD eventually fails, or they didn't manage to improve the battery cells, or some war starts, you will see the stock boom and crash back down. This is important, especially if a huge part of your portfolio is in Tesla. While Tesla is on the path to become the best company in the world, you need to ask yourself, would you be okay if things go wrong and Tesla gets wiped out? Something to think about there. As for myself, I plan to continue holding on to the stock because I think there's a high chance they will do well. But I will also be diversifying to reduce my risk, just in case something happens. Anyway, that's all for this video. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.